Hey guys, welcome to another video, and in today's video we're going to talk about how you can make your online store a little bit more profitable in order to take more money away for yourself and your family and everybody else who obviously you need to take care of. This is on the back of last week's video where we spoke about what the actual online store makes in profit, because of the fact that everybody just thinks about doubling and tripling revenue, but that's not what it's all about. And we've learned these lessons the hard way. We've had businesses grow from 0 to 200 million in 24 months, which is one of our investment businesses that we've invested in. We've had another online store grow from 0 to 60 million a year. And again, we've realized the hard way that it's all about the bottom line. How much profit are you actually making, and what you can do in order to squeeze out more profit for the business, how you can be strategic about these things. So if you want to have a look at last week's video, I actually recommend that you watch that first, to be honest, because it'll give you more context to what we're going to be discussing today. And then I also want to say, if you enjoy marketing and business content, then this is the channel for you. So just feel free to like and subscribe, and maybe even hit the notification bell if you want to be notified about more videos like this. So in today's video, without really any further ado, let's unpack how you can make your store more profitable. Again, it's on the back of last week's video where we broke down all these different types of expenses that you will have if you had a business that's hypothetically doing 1 million a month in revenue. Now, there are expenses like VAT, cost of goods, marketing, fulfillment, rent, payments, fees like merchant fees, salaries, etc., and then also tax that you have to keep into account. And in today's video, we're going to speak about how you can streamline these things and optimize these things in order to put more profit away. Okay. So the first expense we listed last week was VAT. Now, VAT is roughly 15% of revenue, but the thing is, not all 15% is going to be deducted. So if you do 1 million a month in revenue, not all 15%, the 150,000 Rand, which that would equate to, will be paid over to SARS, because you can offset a lot of expenses to that VAT. For example, if you had to buy cost of goods and the cost of goods was 100,000 Rand hypothetically, then hopefully the supplier that you're buying the stock from is VAT registered. Now, if they sell you 100,000 Rands worth of goods and there's VAT included in that, then it means that out of that 100,000 Rand, 15% will be VAT. So if the stock was, for example, if the invoice basically came down to 100K, then you can officially deduct 15,000 Rand of that to VAT. Okay, so if your VAT then was 150K on a 1 million Rand store, which will be 150 in theory, then 15K can be deducted from that 150K. So now you only have to pay 135K essentially. And you can do this with every single expense that is connected to the business. Now, if you go by yourself, for example, maybe you want to buy a watch. Actually, funny enough, a Rolex or an investment type luxury watch, you can offset strategically if you categorize it accordingly. You can offset that from tax and VAT actually. So that's going to be a bad example. But there's a lot of personal stuff that we buy for ourselves that's not connected to the company specifically. Like, you can run restaurants through tax and VAT. You can run clothes, especially if it's work attire. You can take clients out for entertainment, like events and so forth, as long as it's all really the case. But let's say, for example, you took your family on holiday. You and your missus went on holiday and it had nothing to do with work. Now, some people will probably put that through the business, but in theory, technically, a lot of those things are not actually business expenses. And if you get audited, you might get a little bit in trouble unless you can prove that there was some business conversation that happened during that trip. But the reality is, if you go to Mauritius and you just go to a 5-star resort and you just go and splash cash just for the fun of it, there's a good chance that not all of it can be deducted from tax, if any, depending on, again, how you've categorized it. So if that holiday was 50K, then all 50K is actually seen as a personal expense. However, if you did a company trip where you took your actual staff members away on a little break for a weekend, like we do, or actually all the time, or at least twice a year, then that is actually a company expense. So that 50,000 Rand trip or 100,000 Rand trip that we took the company on is actually only 85,000 Rand because we offset VAT to it. Now the same with cost of goods, the same with shipping, the same with fulfillment, the same with marketing. So if you're spending $1 million a month on marketing, then 150K of that marketing can be offset against the VAT that you have to pay. Okay, now that's the first tip that I can give you, is have an actual very strong financial person help you squeeze the most amount of money from the VAT and the expenses that you actually have in the business. Go through every single expense and ask yourself, is this connected to the business? And they will legally tell you what you can offset and what you cannot. A lot of people don't do this at all, actually. It's actually shocking how many business owners don't do this at all. So the first thing is look at the expenses that you have in the business. Make sure that your business is VAT registered, because you can't claim VAT if you're not VAT registered. Make sure the suppliers you work with is VAT registered, because if they invoice you and they're not VAT registered, you can't claim VAT. Then also make sure that you add your VAT number to Facebook and Google and all these places. Make sure that you add your VAT number to the software that you use, all these things, because you can deduct 15% of all those expenses to VAT. So in theory, as opposed to paying 150K VAT, if you're really good at what you do and you've got someone helping you, you might only pay 50K VAT. You know, you've just saved yourself 100K just by documenting and being strategic about how you file for VAT, which a lot of people don't do. So in essence, that is the first tip. Get yourself a financial person who can help you with these things. If you don't know what you're doing, you will be wasting a ton of money, and in fact, you will actually end up running backwards because of it, because of that negligence. Now, the second thing is cost of goods. So every time you sell product, you have to buy new product, right? Otherwise, your business is only going to be a one-hit wonder. You have to bring in revenue every single month. Therefore, you need product to sell every single month. Therefore, if you sell product, you have to restock it. And sometimes if you want to grow, all the time, you're going to have to buy more stock than you actually did the month before. But what you can do is get strategic with your suppliers. So if your suppliers are technically VAT registered, you can deduct 15% of the actual cost of good. But what I would do if I was you, I would go to my supplier and say, listen, I normally order 100,000 Rands worth of stock from you per month. And that equates to, let's say, 5,000 units. I don't know. Let's say that cost you 5,000 units. Okay? So hypothetically, let's say you're buying a product for 20 Rand, right? What I would do if I was you is I'd say, listen, if I give you 200,000 Rand, is there a way that you can help me bring the cost of 20 Rand down to 15? Now, in essence, what you're doing is you're dropping the actual cost of the product for yourself so that you can make more profit. This will impact your cash flow, so make sure that you can actually afford to do this. But in case here, what you can do is to say, listen, as opposed to 20 bucks, I will give you 15 bucks. Will that work for you? And then they're going to say yes. 13,333 units, if you think about it. Is that correct? Damn, that's correct. So you basically got 30% more product now than you would have gotten, essentially, because here, if you just had to pay the normal price, you would have gotten 10,000, okay? This would have been 10,000 at 20 Rand. But because you negotiated down to 15 bucks, you now have 3,333 Rand more, which is 33% more stock, okay? Now that 200K will have VAT on it. So that 15% VAT now is essentially 30K that you can deduct from VAT. And that will also be deducted from tax. So, you know, if it comes to close to tax season, that's usually when you want to buy in bulk so that you can reduce the amount of tax that you have to pay. Because essentially you can offset 28% of that number to tax. So that's going to be roughly 55,000 Rand that you can deduct from tax. So when it comes to tax seasons, try and buy in bulk if you have the cash flow to do it, essentially. So the bottom line here is just to negotiate with your suppliers in order to see if you can actually drop the unit cost of the products. So negotiate. And that's what I said earlier, like some of these things might be a little bit superficial, like I can't teach you how to negotiate, but it's all about just understanding what makes sense for them and what makes sense for you. And negotiation is just being honest and truthful and just giving it a shot and being assertive, saying, hey, listen, if I give you this, can you help me with that? Can we make a deal? I want you to win, and hopefully you want me to win as well. So negotiate with your suppliers. That is essentially what it comes down to when with cost of goods. Now the same thing with Payment fees. So if you look at payment percentages, the transactions with your merchants like Pay Just Now, Pay Fast, Peach Payments, etc., all of them are actually flexible on the percentage that you pay. And the bigger the store gets, the more revenue you generate for yourself, the more revenue you generate for them. The more revenue you generate for them, the more leverage you have. Okay, so the average fee, for example, on Pay Fast, I think is 2.9%, or I think sometimes it actually starts at 3.2%. So depending on your number. Now, every time your store grows with an extra 50 to 100, I'd say extra 100 or 200 grand per month, negotiate. Again, negotiate. Because what I've seen is if you have a store that's doing, for example, 1 million a month, and you're paying 3% on fees, 3% fees, that is 30K. Now, if you get that down to 2.5%, you only pay 25K. Okay. Now, 5 grand is not a big difference, but guess what? What you can do is take that extra 5,000 bucks and put it into your marketing. Okay, so put it into your marketing. If you have, for example, a 5x ROAS on your ads, then that extra 5K is going to give you an extra 25,000 Rand revenue. So that is what we love about negotiating and squeezing out the most you can out of the business. That is essentially how you start to become a business owner. This is what business owners need to focus on all day. This is what we say. Let the marketing be run by someone else. Obviously, you can do it yourself if you want your own internal team and all those things. But essentially, the more time you have to focus on these things, the more successful your business will actually be. So negotiate in order to get the best percentage. And if you have 5 merchants on your store, obviously the more you have, the easier it is for people to pay, the higher the conversion rate will be. But there's 5 people that you can negotiate with as well. The other thing is fulfillment. Now, fulfillment, most people only use one courier. So they only use one courier. Like, for example, the courier guy. There's nothing wrong with that. But the moment you use a shipping aggregator, what is a shipping aggregator? A shipping aggregator is something like Bob Go and ShipRaiser. So ShipRaiser is a nice one. They've got really good pricing. Shout out to the CEO, Sahil, is a good friend of mine as well. ShipRaiser, for example, what they do is they list all the courier companies for you. So if the average fee of a courier was $100 with Courier Guy, hypothetically speaking, then these guys will always make sure that you get the cheapest percentage based on where the parcel has to go. So if the parcel had to go to, let's say, Johannesburg, and Courier Guy charged you 100 Rand, these people will say, oh, but there is someone like Drop24. Again, shout out to Andrew, good friend of mine from Drop24, CEO, who potentially can do it for $75 because he's in that area and that's where he specializes in. So now you just saved yourself 25 Rand on that courier. And if you do 1,000 parcels in Joburg a month, if you do 1,000 parcels, that becomes 1,000 times 25, that equals 25,000 Rand saving. 25,000 Rand saving, just by being a bit more strategic with how you do those things. Okay, so when it comes to your fulfillment partners, use a shipping aggregator and negotiate. Negotiate, that's also part of it. I need to write better. Anyway, I could have been a doctor. Fun story, my wife's a doctor and she writes amazingly beautiful. She's got the most neat handwriting I've ever seen in my life. Right, so we've spoken about VAT, COGS, payment percentage, fulfillment, and then there's something like marketing, right? So when it comes to marketing, what you want to keep in mind is that the lower your cost of acquisition is, the more profit will be in it for the sale for you. So what you need to do is focus all your efforts on how to get the lowest cost of acquisition. And this is why you usually have dedicated people helping you with your marketing, whether it's internally or externally, it doesn't matter. But you need someone dedicated to helping you drop the cost of acquisition. Because if you can drop the cost of acquisition let's say you make 500 Rand. Let's do this. Let's say you make 100 Rand profit every time you sell a product, but the cost of to get that profit is roughly 150 bucks. So before you get confused, this is the profit that you make, not the actual revenue from the sale. Okay, so this is why this will be more. If you pay 150 Rand to make 100 Rand profit, okay, the profit that's left after, hypothetically, let's say the order value was 1,000 bucks. So you paid 150 Rand to make 1,000 Rand, but you made 100 Rand profit. Not good margins, but just hear me out. It's just for an example. If you had to drop this to 125 Rand, now you'll make 125 Rand profit. Okay. Again, if you do 1,000 orders per month, that becomes an extra 25,000 Rand profit just because you dropped your cost per acquisition by 25 bucks. So this is why your digital marketing is so crucial for an online business and so important, because essentially you need to drop your CAC so you can increase your ROAS, which will automatically increase your POAS, which is your profit on ad spend. Okay, so that is what you need to be doing there, and that comes down to testing creative, testing audiences, testing offers, testing copy, testing angles, getting UGC content. All of these things is essentially important. Fixing your conversion rate on your store, doing abandoned cart emails, more emails, SMS, WhatsApp, all of these things can essentially help you drop your cost of acquisition. Okay, so that is the lesson there. VAT we've spoken about, cost of goods we've spoken about, payment fees we've spoken about, fulfillment we've spoken about, marketing. Now you understand why it's so important to hire someone internally full-time or an agency, because the cost of the agency hopefully can help you drop the cost of acquisition, which will as a whole make you a lot more money after paying the agency and everything else, depending on where the relationship is with that agency, obviously, because it will take a good 3 months probably to get into that relationship and make sure it's profitable. And also depends on many other factors, which we're not going to go into today because that's just going to be unnecessary. So marketing we've spoken about. Let's have a look at what else we've got here. We've got rent and salaries. Like what you want to do from a rent perspective, again, which is pretty cool, if you have the cash flow to do it, is to negotiate your rent, but do it in advance. Maybe sign a longer lease if you can. A lot of people, depending on the size of the building, the bigger the size of the building, the more rigid landlords are usually when it comes to the fees they need in order to cover those bills. So for example, if you had to pay 50,000 Rand a month for 1,000 square or 700 square meter warehouse, that landlord is going to ask you to sign for a longer period of time. He's going to ask you to sign for 3 years, and he's not going to be as negotiable when it comes to his rates, unless it's a very slow area where you don't get a lot of leads. But if you had a smaller warehouse, and if it was you knew the landlord personally, maybe they will be more open to helping you and the business at the end of the day. So if your lease is for, let's say, 1 year, so let's say you have a 1 year lease, ask yourself, can you negotiate for a 2 year lease as opposed to, let's say, 10 grand a month? You can now ask them, listen, I'll commit for 2 years, but let's start with the first year at 8 grand a month, and then next year we'll make it 9.5 a month or whatever. So technically for 1 year, you'll be saving 2,000 Rand a month, which becomes 24,000 Rand a year. Okay. What you can also do is pay in bulk. Say, cool, give me 8,000 Rand for the first year if we commit for 2 years, but then as opposed to 96,000 Rand, I will give you 90,000 or 80,000 Rand upfront for the next 12 months. Now you know that your rent is covered. You don't have to stress. So now in essence, you've saved another 16 grand. So you saved us plus 16. So that now becomes 40K if you think about it. So negotiating with your landlords is extremely crucial. Not everybody is going to go for this, obviously, but if you work with someone and you know them personally, and they have it's a small space that doesn't cost too much, they'll be a lot more agile in helping you, and you can obviously leverage your negotiation skills in order to get the best deal. So that's from a rent perspective. These are just things that we've done, obviously, at the end of the day. Then salaries, I mean, you can't really know, you don't want to do people in, but just make sure that you hire people at a fair price for the value that they're giving you. I think a lot of people don't know what they need to pay. So do some research on what you need to pay and what you need to get back in value for those kind of expenses. A lot of people overpay when it comes to staff and their skills, which I've seen, and I'm not someone to negotiate people down when it comes to what they want to earn, but it's just about making sure that you're actually paying a fair wage for the exchange of value at the end of the day. And I think a lot of new business owners don't know where that benchmark is. Like, how much should I pay for the actual value that I'm going to get back? And I think that's just something that you need to do more research on to make sure that you're paying people fairly for what they give you back. And then also creating a bit of a roadmap with those people and go, hey, where do we want to go? Do you want to continue growing with the business? If you want to earn more, this is ideally the roles and responsibilities that I would love to assign to you so that you can add more value and then fairly justify the increase that you deserve. And I think it's all of these things that a lot of business owners don't get right, and they completely mess it up, and then they overpay, and that's why the actual expenses of the business become so bulky, because they don't do any of these things. You know what I'm saying? So there's salary negotiations. So people don't do any of these things. So even if you had to do 3 of these things or 4 of these things, I think you'll be running a better business. But some people don't do any of these. Imagine you did all of these. The other thing I was looking at is just lastly, your tax. And again, this ties in with the VAT side. So I'm not going to dive in it too much, but it's just getting very strategic with what you actually deduct from tax, and having a really good bookkeeping approach and having someone full-time helping you with these things and making sure you're deducting everything you possibly can from tax, because you don't want to overpay. A lot of companies overpay when it comes to tax because they don't think about what they can deduct. They don't think about buying in advance. They don't think about buying in bulk. They don't think about any of these things. So when it comes to your salary, for example, a lot of people don't know that you can actually invoice your company as a consultant. You can actually put a lot of personal expenses through the business. So if you have internet at home and you spend a lot of time at home, that internet expense is not a personal expense. It could be a business expense, or a big portion of it could be a business expense. If you're using your garage, that can be deducted from tax. If you're using your car for work, that could be deducted from tax. If you get a new car and you loan that car from the bank, then essentially that value of the car can be deducted from tax, and if you the percentage of the actual loan, that interest on the loan, can also be deducted from tax. So having someone teach you these things is super crucial, because if you don't know it, then you'll be wasting money, and not everybody has the time to research these things. So what you can do is just speak to someone who can help you with this, or if you have the time, just chat to ChatGPT and see what it can teach you as well, even though there's a lot of things that you're still going to have to double check, because ChatGPT makes probably more errors than a human sometimes when it comes to these things. But the reality is it gives you a way of thinking differently, and then you just have to have an expert sign off on what's actually legit and what's not. So this is everything from more of a financial perspective, like on the actual management of the business itself. And the other things we can consider is, for example, we spoke about dropping your CAC from a marketing point of view. The other thing you can do is you can try and increase your conversion rate. So if you can increase your conversion rate on the store, automatically that marketing budget that you have will go a lot further. So for example, and this is a bit hypothetical and hyperbolic, but if you have a 1% conversion rate and that makes you hypothetically 40 grand profit for the business in total, by getting to a 2% conversion rate, you can now make 80k profit for the business without any additional other expenses. Okay, so I know that sounds too good to be true. It is true. It's just not always as easy to do. But even if you had to get to 1.5, then you're already making an extra 20k a month there. The other thing is average order value. So what tactics on the store can you deploy that can increase your average order value? Because if the average order value is $800 and you somehow find a way to get it to 1,000, you now have an extra 200 rand in theory back in revenue without having to increase the expenses of the business. Another little hack is what we call VIP fulfillment. And VIP fulfillment is really something very simple. It's where you charge an extra, I would say, 50 to $70 in order to do express fulfillment, not express delivery, next day delivery, but just fulfillment. See, the moment you do 2,000-3,000 orders a month or more, then you're going to have a certain backlog of orders, and there's certain people who will happily pay in order for their orders to be fulfilled quicker. And when I say fulfill, again, not shipped per se, but picked and pack quicker. So for example, if you have 5,000 orders a month and 10% of people take you up on that deal, then that is roughly 500 orders at $50. That is an extra 25,000 Rand a month, pure profit. You had nothing else that you had to do in order to make that amount of profit, because essentially it's just picking their orders first, because they paid a VIP fee in order to allow you to do that. So I don't want to go too deep into this, because this is probably a video on its own, and we'll do that at a later stage, but I hope you get the gist of today's video. Is running your business as a business owner actually becomes a full-time thing. And if you're not spending your time on this full-time, on how to actually streamline the finances of your business in order to maximize the profit that you're making, if you're not dedicating at least 50 to 60% of your time to this, and negotiating with suppliers and finding new ways to grow revenue and adding new products and helping with this, your agency or the internal team that you use with these things specifically, then I think you're spending your time on the wrong things. Innovation, all these things will be on the forefront, obviously, so a lot of time should be spent on that. I'd say 20-30% of your time should be spent on innovation, I'd say 50-60% of your time should be spent on this, and 10% should just be spent on, you know, whatever you feel is excites you in your industry, or whatever you feel is necessary. And from my point of view, if you can get this right, I think you can run a lot more of a profitable business. And I think this is where most business owners fall short, and they blame everybody else if the business doesn't make profit. And they think there's a silver bullet. They think that there's a button that they can press that's going to skyrocket their revenue and their profits, and that's just not how it works. If you get these things right, it could happen. All right. Hope it helped. Again, if you enjoy marketing and business content, feel free to like and subscribe, and maybe even hit the notification bell if you want to be notified about more content like this. Much love to you guys. All the best. Cheers.